Last week we said gold was looking like a bottom. This week, get ready for the reversal. It's the other direction coming. All that and more on today's Sunday night charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. Let's take a look at the moving averages. Colors on your screen. The 21 days in red, 50 days in green, 100 days in blue, 200 day. That's in tan. And let's go on to price versus momentum. Price is the general direction. Prices are headed. Momentum is the rate of change. A bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break. Or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing of trade, and provide direction in the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Now, keep in mind, the key to today's show is volume price. I'm going to show you how we could see the equity markets were bottoming, how we saw gold was bottoming, and why gold's likely to head the other way. But you got to hang on. Did we get there? Let's start out with the S&P 500, symbol SPY. No change in price or momentum. Now we see it popping back above its 21-day and 50-day moving average, going green across the board. Remember, we just seen this surge in prices toward the end of last week. 1 month momentum still negative and falling. 3 month momentum now negative and rising. So we're seeing a lot of good indicators that would tell us that the moving average price and momentum should start to flip from bearish to bullish next week, provided, keyword provided, prices hold. Let's take a look at the volume price analysis. Now, if you're using your charting software, you'll need to enable this, and it'll move this volume down here up to the side so you can see where it's trading. Now, remember, on a 6-month window, we said prices could get down that low. It's possible. There's a lot of support there, but it didn't, and I want to show you what's really cool. If we can look at the 30-day window here and just change the different time scales, and what you see is this bottom was being bought over the last 30 days, and that's how you knew prices were going to go up. Even over the 10-day, you could see it being bought. There was your indication that this was at least a short-term bottom. It bounced higher, and now it's probably, I wouldn't be surprised if we see the S&P now make a run back near the all-time high, even a little higher. I wouldn't be surprised if there's a gap up in today's futures here on Sunday. Wouldn't shock me at all, because this is just a big gap of volume. Buyers are now down here at 429. Sellers are up here at 450. And so the buyers have got a little more room to drive this price up before they run into sellers. Let's take a look at the NASDAQ QQQ, and no change in price and momentum. It remains below the 50-day moving average, usually a pretty key moving averages. The two that I like, 21 and 50, it's back above the 21-day. 3-month momentum now positive and rising. 1-month momentum headed up, negative and rising. So some good signs that would again indicate that price momentum on the moving averages will change if it can hold. Let's take a look at QQQ. See what we got. Look at this nice volume profile. Now, acting as a magnet. So you see over the last 6 months, is acting as a magnet higher. What does that tell you? How do you interpret this? This is a bottom building here. So when you see price go below this, where the heavy volume is at, and come back up, it's telling you where the buyers are at. In fact, we could zoom in over a, say, 90-day period. You can see them there acting as a magnet, again, pulling prices up. That's where the buyers are at. Looking over the 30 days, you can see that this became a tradable bottom if you start zooming in on where volume is at. And on the 10-day, you can get the same picture as the S&P 500, and you knew that this thing was more likely to go higher than lower. And where should we expect to see the NASDAQ moving? Probably back up here into the 374, 375 range. Wouldn't surprise me if this has still got some momentum to the upside. And with that, let's take a look at small caps, who have been the reason why those large caps aren't going higher. Price now flipping bullish on the 21-day moving average as price starts to move higher. 50-day moving average, we're seeing the momentum start to increase at the rate of change, now driving that moving average higher. It's above all the key moving averages, so that's good. But remember, they were really tight together. We'll look at that. 1 and 6 month momentum negative rising. 3 month momentum is positive rising. Is that finally the indicator that the big equity bulls have been looking for, small caps to confirm? Well, let's take a look. And you see this cluster of moving averages. I mean, one big move down and it could be below all the moving averages, But again, the 6-month volume profile has not budged hardly at all. It's still concentrated there, and when moved up into, let's zoom out to the 1-year chart, into the sell zone on Friday, and they got rejected. So up here is your sell zone. Down here is your very well-defined buy zone. And we can move in and look at the 90 days, and you can see this is just moving too tightly to really trade, especially when it's going sideways. But right now, the sellers, ball's in the seller's court, so we'll see if the sellers take the small caps down, and while the buyers try to push the large caps back up. Remember, if the small caps don't go higher, well, the large caps are unlikely to. So let's move on to the transportation sector, which is often a leading indicator for large caps, now starting to get some green after being heavy in the red. Momentum on the 21-day moving average now starting to gain some speed to the upside above all the key moving averages. One momentum is now positive and rising. It's not red. It's not red at all. Let's take a look at IYT, and here you go. There's that volume profile that was looking like it was rejecting there. As you can see, price came up off the low, got rejected, came up and looked like it got rejected and gapped higher. Now, what does that tell you? This indeed is a bottom. Where should price of IYT go? It should try to breach between these two zones of volume, and you should be looking at somewhere an upside target of here in the 265. So you're seeing from the transportation sector, there's definitely some momentum behind these large caps trying to push higher. So wouldn't be surprised if this also moves higher, but now you know this is indeed a bottom. So if you're in a short-term trader, at least you've got a floor. Maybe you look at putting your stop loss somewhere down there, but now you see there's a definite floor there on the 6-month. It was looking like it was resistance. It turns out it's actually support. So good sign for the transportation sector to take the large caps higher. How about the energy sector? Wow, look at that. Completely green across the board, unchanged over last week. So the energy sector back being the darling of the industry, as it was not too long ago, in the red. Let's take a look at crude, because I do like to look at crude, and you can see the volume profile holding the 70. So bottoms, not even close for the last 6 months. This price has been up here in the 82. Let's zoom out to the 1-year chart, and now you see over the last year that 65, not as high as 70, but definitely a floor at 65. We've heard this from oil experts that 65 will be bought. Over the last 2 years, 41 is now the price. How far out do we have to go to see if we can pick up something above us? And it doesn't look like it. So blue skies for crude. Where could this easily go into the $85 range? Absolutely. Absolutely nothing holding crude back except itself at this time. So let's take a look now. Oh, well, we can look at XLE, don't we? Whoops. How about XLE? Remember we said if it gets up into this $56 range, there'd be sellers. They didn't last a whole long there. Let's zoom out to the let's go to 2-year chart. Maybe we need to go to the 5-year chart and get some view into here. And you could easily see now XLE, really getting up here into the $58 to $59 price range following crude higher. So it looks like what this was looking like a head and shoulders actually became a spring, launching prices higher. So again, the path of least resistance for the energy sector is to the upside, not the downside at this time. All right, let's move on to financials. How about that? Price, momentum now, bullish across the board, green across the screen. Of course, you got to get nervous. When you see green on these charts, we've learned very clearly that is a sign of an impending reversal where you don't want to get too confident. But look at that. Financial stocks, are they at? Yes, indeed, new all-time highs. So there was a buy zone below, and it held, broke through the sellers, and is now pushing higher. Where do you go with this? Well, the answer is it's going higher. The only question is how high, and the answer to that is don't have one. But financial stocks bullish unless bonds have something else to say. There it is, the financial stocks going on new all-time highs, potentially as banks continue to buy their shares back. and that will go higher. But again, the bond market may have something to say about that. We'll look at that momentarily. How about the industrial sector starting to turn? And here you can see, when the broad price and momentum indicators on the moving averages are red, but everything else is turning green, what's coming is the industrial sector. You're going to see price on the moving averages rise, momentum start to pick up. So it's above all the key moving averages, 1 3-month momentum negative and rising, 6-month turning positive and rising. Let's take a look at the industrial sector, and sure enough, a magnet right up to that volume profile, acting as resistance at the moment. So no sign that is indeed a bottom yet. It's just acting as a magnet up to it. Normally it's a good sign. Problem has been rejected there. So we'll see how this plays out. Let's zoom out to the 1-year chart. So you can see that's not a good sign at the moment, where you're seeing a lot of selling on XLI. But again, the large caps are telling you things look like they want to go higher. So we'll see. How about the utility sector? Now is starting to get some green to it, and price momentum still bearish. Now back above its 21-day moving average. 3-month momentum negative and rising. Let's see, did the utilities find a bottom? There's a lot of support there. And there we saw that this was, see the volume profile of 65.45 it acted as resistance, boom, came back down, and now slamming into it. The question is it still resistance? If it is, price gets rejected here. Too early to call that is indeed a bottom, but you can see there's a lot of shares trading hands there. So I'll flip a coin. If you think that's a bottom, then I'll go with it. If you think it's a top, well, you can see here there's a bottom on the 10-day at 64.35, so that acted as a boost. But everything else is on every other time scale is telling you that is resistance there. So we'll see. Maybe it was just a short-term move by the bulls. The only way to find out is what happens in the markets early next week. Let's get into the gold, because here's a story of today's show is the potential reversal to the downside of gold and gold mining stocks. Price turning bullish on the 50-day moving average as it turns higher. We see above now the 50-day, through the 50-day moving average, all across the bottom, all the momentum screens, negative and rising. So there's a lot of positivity building here. But does the market say otherwise? Let's take a look at GDX. And there you see that 6-month volume profile acting as resistance. And that's, whoops, we don't need to see that. We need to see, let's go to the 90-day and acting as resistance. Let's go zoom in a little more. 30-day, there's your bottom. Remember, we talked about this being at least a bottom to head for a rally. Let's look at the 10-day was below there. So we saw how close this was. And if you're a short-term trader, you could see the volume take this higher, but now you're running into resistance. There's a small gap between where the buyers are at down here at $28, $29, and the sellers are at $32. So it's not a lot of trading range, but you look at this, the bias is to the downside. How about GDXJ? It's trying to bust through this heavy volume profile. I remember it's got to get into here to kind of reject these sellers. So it too is not in the best of position, trying to break through that wall. But we'll wait till we look at gold here in a moment. How about emerging markets? This again would be a bullish case for the metals and the mining stocks if it was headed higher. Now back above and through the 50-day moving average, 1 through 9-month momentum negative and rising. So again, we're seeing some trends here, but still not enough to change the big picture. Let's take a look at EEM. And what do you see? What would be your prediction? I want you to look at this chart. See the volume profile, 52.52. See how price is rising. What should be your prediction? That EEM is going to get to that volume profile. That's what your prediction. So there's a little bit of move left there. We'll see. My prediction at the moment is we should see some green equity futures. Like, that's a real difficult call to make because they're always green. And then you can see on the overhead at the 1 year. So there's a chance you could see the EEM run up and try to bust this volume, but the momentum behind it is super weak. The 100-day moving average sitting here right around 52.82. Let's see on the 6-month, where is that at? 52.52. So wouldn't be surprised if we see EM test its 100-day moving average, where that volume profile line is at. My guess gets rejected as we see some other indicators taking prices for risk assets down. How about high yield bonds? Some bearish news here. Price going bearish across the board on the moving averages. Momentum only bullish on the 50-day. So momentum is starting to pick back up, but not enough to drive prices back above the 9-day moving average. 1 and 3 and 9-month momentum negative and rising. So it's trying. There's some undercurrents here. But high yield bonds, there's going to be some bag holders in this, especially if you've been following the Evergrande story. And there you can see now it's starting to get rejected at the volume profile line, suggesting that, again, this is indeed resistance here. Sellers are aggressively looking to unload as much as they can onto any unsuspecting buyer in the high yield space. So you can definitely see that picture is, again, this is starting to look pretty bearish as every time it goes up, gets rejected, up, rejected, up, rejected, up, rejected. And you can see the rejection is at 87.22. That's where the sellers are at. So now you've got the picture on the 1 year, and you can see it on the 6 month there above that. So they're looking to get out. That overall bearish picture for high yield bonds, bearish picture then for the broad equity market. As we move into treasuries, of course, we know treasuries, Bond King loves those. Momentum now flipping back bearish on the 50-day moving average, but it swung above the 9-day. Not a pretty picture here. 3-month momentum, 12-month momentum, negative and rising. Let's see if we get any kind of different picture on TLT. So we've got the volume profile on the 6 month above. No surprise there. How about the 1 year? That's how everyone was calling it. This is a big soft. No, it actually wasn't, because there's a lot of buyer support down there. Didn't need to get there before it came up and tagged the bottom of its 100-day moving average, the downward trend of its 21-day. But let's zoom in and go to the 90-day chart. Still above, so still the sellers are up there. How about we go to 30-day chart? 30-day chart's acting like a magnet to bring price higher. And there you see on the 10-day chart, is starting to hold there. Now, obviously, I have a different picture of this because the Fed is still buying. It's still, even if they taper, they're still going to be buying. So, again, the chart of TLT is still bullish as it's back over its 200-day moving average, and that is not great for financial stocks, as everyone's hoping go higher. But how about gold? Is the story for gold the same as the miners? Well, I think it is. How about price? Bearish across the board. Momentum now flipping bullish on the 50-day. So the rate of change in the 50-day is picking up to above now through the 21-day moving average, but the 6 and 9-month momentum turning lower. So the undercurrents of gold is saying a little bit different picture than we saw with the mining stocks. Here's gold futures getting rejected. Boom, at 1,800. There's a 6-month volume profile. Strong rejection there. How about the 1 year chart? Same spot. Indeed, let's go to the 5-year chart. Well, that's at the bottom, so nothing there. How about 90 days at 1,800? I mean, you get the feeling there's rejection here. So there, it's now at the 30-day chart where you go down to 1,758. So it tells you gold likely to head lower here to test that. 10-day chart, it's right there. So now you see the sellers are 1,800, the buyers are at 1,760. Tells you the likely path for gold is indeed a retest of the buyers to see if they hold. If they don't, that'll take prices lower. So again, gold reversal certainly looks like it in the cards. How about we go to silver, which looked like it was about to fall off a cliff, but the buyers have saved it above the moving averages through the 50-day. 3-month momentum now negative and rising. So the undercurrents here of silver looking good. Just try to form a bottom. Let's go and see what's going on with silver. And there is a bit of a bottom there. Let's zoom into this. Let's reverse the direction. 10-day, there's your bottom. So now you can see all this volume building. That's why this volume profile is so important, to tell you prices were going to go up. They did. Now let's go to the 30-day. You see there's a nice bottom here built by some volume. Doesn't mean it's the bottom of all bottoms. It just means it's bottom. 90-day sellers are still way above there. How about, what do we see? 6-month sellers way above there. 1 year sellers above there. So what does this tell us where silver is probably going? It's probably going to get into this $24 price range and test somewhat of the bottom of this recent selling right here. We can see it on the 30-day chart. So you can see, high 23, maybe even low 24 is where it's likely headed. So silver likely to head a little bit higher, but if it follows gold, well, and we know that's going down. Then there is the almighty dollar, king dollar, price bullish, momentum bullish, below the 9-day moving average, but everything green, and the volume profile on it looks good too. Let's take a look at the dollar. First of all we see here is a retest of this major support around 94. If it holds here, again, the price direction for the dollar is to the risk of the dollar is now higher. If you can't see, this is what a bottom looks like, where you see price come down, buyers come in, come down, buyers come in, and buyers all coming in. Tells you the direction for the dollar is now up to this 97 on the low side. You're going to see 96 and then into 97 is the direction of the dollar. Let's take a look now at UUP and see where the volume is. Oh, see, you can tell it's a bottom forming because the volume profile is stuck there at this $25. And there's your bottom. It's beautiful. You zoom into 6 months. It's above that. It's beautiful. How about over 90 days? There it is. So support for the dollar is up. That's negative for risk assets. And with that, we'll look forward to seeing what the equity futures come out and bond futures here shortly. And with that, we'll see you back on Monday for the regular show. I'm your host, Steven Van Metre. Thanks for watching. Bye now. Content of this video is provided as educational information only. It's not intended to provide investment or other advice. It does not to be construed as recommendation or solicitation by any financial product instrument or to participate in any particular trading strategy. This video was prepared by Steven Van Metre, personal capacity. Business expressed in this video that do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.